You're saying you're actually looking forward to the next meeting. You want to see another hike in the next meeting and then just see where we're at. But where do you think we're going to be if that happens?
Yeah, it's a great question, Frank. Obviously, we've been talking about this 50 basis point hike for several weeks now, and I think it's pretty much baked into the cake at this stage. And what I'm looking for as we move throughout this summer is what they do in the next meeting in June. Obviously, CPI numbers, PPI numbers, and PCE numbers are obviously really hot. So the concern around inflation and the concern around managing inflation going forward is obviously plays into the narrative today. But I do think, going into late part of the summer, I do think the Fed will really be data dependent and kind of see where markets are trending, after they start, front loading this policy, because obviously they have to do it at this stage. They've been talking about it for some time, but they have to execute at this point. So I'm really curious to see what the late stages of the summers look like after these two hikes get underway.
Yeah. Eric, over to you. Jason just hit us with a bunch of three letters there, with the CPE, the PPI. I'm going to hit you with one more, the VIX. It's up 97% year to date. Hard to remember this after all that's happened this year, but at the beginning of the year, we had Omicron raging. Just about a month before that, it had been identified. We were at peak supply chain congestion, and we already had some of this rising inflation. Why are investors so much more spooked now? Is it simply the geopolitical uncertainty, or is there something else going on?
Yeah, Brian, it's been quite a year, right? And it's only the second day in May. So we've gone through a lot. It's a lot to digest. There's been so much that has happened this year, and uncertainty is still the reigning theme for investors. Uncertainty, as Jason just talked about with the Fed policy. Hopefully we get some clarity Wednesday, and that will calm the market down, hopefully bring the VIX, a measure of market volatility, lower. And that could help the markets. And we saw that yesterday with that reversal. Hopefully, maybe that was the start of a bounce here. And today, this morning, as you see the futures, we're getting some upside as well. But the uncertainty, right? Uncertainty over COVID, as you mentioned, uncertainty over the war in Ukraine, uncertainty over supply chain. That's been the big theme, and that's why the VIX is so high and why we've seen such a negative, tough market so far this year.
All right, so everybody always says they're searching for quality, Eric. You're actually searching for stocks that pay a dividend. Can you give us kind of some sense of what kind of stocks you're talking about? Are there particular sectors?
Yeah, clearly what we've seen is any high valuation stock has really been hit hard, as we've seen with companies come out. We're seeing the effects of the economy, and they've been hit hard. Dividend-paying stocks give investors that assurance that you're going to get a return while you ride through this difficult market, this volatility. So we like low-value stocks, price to earnings below the market average, below 16. And right now you can find great paying companies paying dividends well north of 3%. Right. So,
Eric, can you give us an example or two? Would you mind?
What's that?
So would you mind giving us an example or two of the kind of stocks you're talking about?
Yeah, in consumer space, you have Kimberly-Clark, pays north of 3%. Lots of financials. We do like financials because that sector has been hit hard. And I think when you get some clarity here from the Fed, you're going to see certain financial stocks, Morgan Stanley, a lot of different big banks, Bank of America, Wells Fargo, State Street, all low valuation companies paying dividends well north of 3%.
All right, Jason, turn over to you. I know you said you're looking for quality. You're actually finding that quality in the chip space with Qualcomm. Forward PE right now at 11 times forward earnings. Just to put it in perspective, AMD closer to 22 times. What are you seeing in Qualcomm that maybe you're not seeing in other parts of tech?
Yeah, obviously, I think Eric makes a great point in just looking at stocks that have multiples that are trading at a discount to the market. So in a Qualcomm, a name like that, that's obviously in a cyclical sector. Obviously, the SMH and semis have really gotten beaten up. I think that's indicative of kind of supply chains and what's been going on there. But Qualcomm trading at 11 times forward, as you mentioned, Frank, with a diversified mix. I mean, they've moved away from the handset business. They're also litigation is behind them and all that they've dealt with over the last several years. I like names like this. Obviously, they beat on EPS. They raise guidance. They beat on revenue. So there's a nice shopping list out here. Quality names trading at a discount to the market that I think as a long-term investor, you should be looking at opportunities here and hunting for similar names like this and across all the sectors, quite honestly.